a $900 billion fund. Every day you have a massive compliant infrastructure that marks to market all your positions. There is no infrastructure for crypto. I want to make a note here just around this regulatory issue that you're raising, and it's a good one. Of all the entities that went to zero, that went to bankruptcy in the FTX portfolio, the only one that is not bankrupt out of the 130 plus, and this is, you know, probably the best evidence of why we need regulation, is LedgerX. Why? It's regulated by the CFTC. 100% regulated. It is not bankrupt. Had the other entities been regulated wherever they were, they would too not be bankrupt. And so just look at this. This is a use case of why we need regulation. There wouldn't be this tragedy and all of this drama and all the rest of this stuff and the loss of billions of dollars. The lack of regulation has caused some problems here, and it will continue to. And the evidence is right here. The only entity that didn't go to zero in the FTX portfolio, CFTC forced the scrutiny, forced the transparency, forced the proof of where the assets were held and the reserves, forced the lack of commingling with the assets. They forced it. They did it. Proof positive that you can regulate this asset class.
I want to thank you all for being here today. We'll have some questions for the record. But I appreciate the hearing, Mr. Chairman.
Thank you, Senator Chester. Senator Hagerty of Tennessee is recognized.
Thank you, Mr. Chairman. Ranking Member Toomey, thank you for holding this hearing. To all of our guests here today, I appreciate your being here. I'd like to touch on something that has been troubling me for some time. We know that FTX's collapse as the second largest exchange is continuing to have ripple effects throughout the entire digital asset industry. But if you look back to even early November, FTX didn't appear to have the necessary scale to cause an industry-wide systemic meltdown. Binance, on the other hand, is the largest global crypto exchange, nearly 7 times larger than FTX by trading volume. At least it was in the month leading up to FTX's collapse. And Binance's market share, now with the absence of FTX, I think means will only grow. If you think about a similar implosion by Binance, that would really prove catastrophic. It would prove catastrophic for the cryptocurrency industry, and it would prove catastrophic to all of the consumers that utilize the industry. Yet U.S. regulators are limited in the extent to which they can mandate appropriate audits or appropriate disclosure of Binance's operations. Unlike the requirements placed on companies which are publicly traded here in the United States, Binance operates outside of our system. So, Ms. Shope, I'd like to start with you. How can U.S. regulators work with their global counterparts to bring transparency to Binance's activities and to understand the reserves that it holds?
I think you raise a very important point that when we talk about FTX or we talk about Binance, so much of what we're talking about is happening outside of our shores. And the influence that U.S. regulation can have on those exchanges and other crypto projects that are not taking place here is limited. I think it's very important to have an ongoing dialogue with international regulators in order to have influence where we can. But I think the most important thing for the United States to do is to create a rational crypto regulatory framework in the United States to try to bring some of that home so that we have maximum influence over how those businesses are operated.
I hear you, Mr. O'Leary, you touched on this just a moment ago about the impact of regulation and the certainty that it could bring. And from your perspective as an investor, Mr. O'Leary, what needs to change here in Washington from a regulatory standpoint so that capital actually does flow to U.S.-based entities and empower U.S.-based entities to win on the global stage?
Every global platform, the #1 prize is to be regulated in the U.S. market, the #1 financial market on earth, period. Now, when you talk about other money center banks or other financial services industries that want to do business in the U.S., they must disclose their worldwide operations. They are scrutinized by the rules we already have in place. A coordinated effort between the Canadian regulator, the U.S. regulator, the ADGM in Abu Dhabi, the regulators in Singapore, basically laying out the ground rules for any entity that wishes to do business in the U.S. or any of those jurisdictions, solves this problem. If Binance is not willing to, and you started by talking about them, disclose, and the reason that Sam Bankman-Fried's claims he spent $3 billion was that he could not get the regulators to approve the fact that Binance owned 20% of their platform. CZ was not cooperative with any of those regulators. He was shut out of those markets, and he realized the prize was to get regulated for institutional capital. Just having 4 or 5 markets coordinate, as we do already in other securities, solves this problem in perpetuity. And all these regulators talk to each other. I've been to Abu Dhabi. I've talked to the ADGM. I seek a license there. And I've done the same in Canada. I'm an investor in the license there. These are long-term, very sound structural concepts, but it needs a coordination. And in one phone call, we could solve this problem.
I'm going to come back to you, Ms. Shope, for a moment. And I want to stay on this concern that I have, particularly about Binance, about the Chinese Communist Party's role and in support of that. To be clear, Binance is being proliferated around the world. It's a state-backed network. They're proliferating in emerging markets in a very predatory fashion. They're in developed markets. And again, now they have an even more open platform as FTX has been taken down. But if you think about an example like Binance with ties to the CCP, a committed partner to the Belt and Road Initiative, and particularly as it expands its market dominance with the collapse of FTX, what does that spell if lawmakers here in America follow through with their threats to ban digital assets or leave the current regulatory uncertainty in place? What does it mean for the global crypto market in general? What does it mean for our nation's national security and our economic security? And most important, what does it spell for the dominance of the U.S. dollar as the world's reserve currency?
Regardless of whether Binance itself is connected with the Chinese Communist Party, which Binance denies, but regardless of whether that's the case, by having a system in the United States that's unclear, that's regulatorily hostile, that could go so far as banning cryptocurrency in the United States, we would be losing the position of having the possibility to maintain American dominance for these technological innovations.
I'm deeply concerned about that.
We would also be losing many of the great minds that want to work on these types of projects that can make strides not just in blockchain and cryptocurrency, but in other technological functions as well. To the extent that the United States is not a place that people look to for economic development, that also puts the U.S. dollar at risk.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Hagerty. Senator Warren of Virginia is recognized. Senator Warner of Virginia is recognized.
Thank you, Mr. Chairman, and appreciate you holding this hearing. I want to echo some of the concerns my friend from Tennessee just echoed about Binance. I do think it's curious that China has made the decision to basically take that kind of risk to ban crypto because of their at least risk-reward analysis. I got so many questions. I do think I know a lot of this started around Bitcoin. I still think, and I think, Professor Allen, you may have touched on this in your testimony, the clunkiness of the technology behind Bitcoin. I mean, you could never go to scale no matter what. If you can only do 5 or 6 transactions per second, that is not a scalable tool. And obviously, at technology, at a power and environmental costs that just doesn't make sense to me. But I'm going to try to get as quick as I can in my 4 minutes. I'm going to start with Professor Allen and Mr. McKenzie. I sometimes worry that FTX is just the tip of the iceberg. You know, I'm sure many of my colleagues have gone through all the bad things Bankman-Fried has done, and the graft, and the Ponzi schemes, and so forth. But I know Senator Hagerty already made comments about the Reuters story about Binance. I really worry. I mean, I know the original pitch was this is going to be a seamless ability to transact without currency risk, without timing risk. I can send my grandmother in Kenya, resources on Sunday in a way that's kind of error-free. Sitting where I do on the Intelligence Committee as chairman, we've seen virtually no examples of that kind of use case. I know, Mr. McKenzie, you've gone down to El Salvador where they tried to make that as the case. It just doesn't seem to be the case. Instead, we are seeing, at least at this date, and Senator Alamos has been a leader on this. I keep trying to have an open mind on the technology innovation, and I'm all in on technology innovation. But at least so far, you know, from where I sit on the Intelligence Committee, I see an awful lot of illegal activity. I see drug deals, I see bad actors, I see ransomware criminals, and frankly, it's not even safe from them. Go back to the Colonial Pipeline issue where our government, when payment was made in crypto, was able to recover some of that. So I guess I'd start again with Professor Allen and Mr. McKenzie. Do you think FTX is a one-off, or is this the tip of the iceberg where we may be seeing a whole series of activities? And if you want to go ahead, and I know it's been raised, but I don't think it in any detail, Alameda Research and some of the potential, I think we're only beginning to see the conflicts that were taking place there. But I'll start with Professor Allen and Mr. McKenzie.
I think we saw the tip of the iceberg a couple of months ago, and then this is sort of moving further down the iceberg, you know, with the earlier rounds of Terra Luna and Celsius. You know, the concern is that, you know, that fraud is definitely being perpetuated, but that the whole industry itself is basically an asset class built out of nothing. It trades entirely based on people's belief that it can be worth something. But as he said, the technology has not worked for a payments mechanism. It's become a speculative instrument, but ultimately, you know, as Mr. McKenzie said, it's a zero-sum game, and if people stop believing in it, then it all falls apart. So Mr. O'Leary has talked about how people, you know, that regulation in the United States is the prize. That's exactly right. Without that regulation as the prize to legitimize crypto, there is nothing there, and it could all go to zero. And whilst that is very bad news for the people who've already invested, I think it's very good news for the rest of us because it's been kept out of the broader financial system, and we won't suffer the consequences from its broader failure.
Mr. McKenzie?
Thank you, Senator. Yes, I just want to echo what Professor Allen was saying. One of the many, many seemingly limitless ironies of cryptocurrency is that the supposedly decentralized nature of it it's in fact highly centralized. I know this. I wrote an article with my colleague Jacob Silverman for the Washington Post about Binance this spring. Binance is incredibly murky, but Binance, as Mr. O'Leary, as other senators have pointed out, Binance is in communication with FTX. They were an early investor in FTX. There was apparently there's a private Signal chat group entitled Exchange Coordination that CZ is on. Yes, this is publicly reported. I believe Mr. Bankman-Fried submitted it into the congressional record. If I'm not, yeah. And so they're all talking to each other. The crypto industry is actually really, really small amongst the people that count. In a zero-sum, strictly competitive game, there's winners and losers. In an unregulated zero-sum, strictly competitive game, you're either a scammer or a mark. If you don't know which one you are, you have a problem. Oh, do you want me to answer the remittances question? I'm sorry, sir.
Well, if you want to just touch on Alameda as well.
Sure. So Alameda is Tether's biggest client. That's according to reporting from Protos from last year. Supposedly, Alameda purchased, I believe, $36.7 billion worth of tethers. Given Alameda, FTX's insolvency, I think one question might be, where'd the money come from?
Yeah. Let me just, I know my time, but Mr. O'Leary, I have a great respect for you as an entrepreneur. Spent a long time as an entrepreneur. I'm trying to sort this through as well. I get your point, but I guess what I'd raise for the chairman and the ranking member is, you know, I'm still trying to wrestle with this in my mind, whether we need a crypto set of rules or whether we frankly, what are we, 14 years after Dodd-Frank, ought to take a bigger step backwards and realize we got this bright, shiny problem over here around crypto, but the amount of financial activity, you look at the fact that over 50% of the mortgage origination now is outside the regulated banking sector. I've been a big advocate for fintech for a long time, but there are a whole series of lending entities out there, again, that have no regulatory protections around them at all. And nothing would be worse than doing a relatively good job, and we may overdid in certain parts on Dodd-Frank, but put a structure around our regulated industry and suddenly see this huge escape of financial activity going outside any kind of regulatory envelope at all. I'm all for innovation, but Lord knows if crypto was suddenly followed by a whole series of fintech entities that were coming back saying, hey, I need my money back as well. I didn't get my lending that was taking place on this platform. We could have a problem. Thank you, Mr. Chairman. For the
Senator Lummis of Wyoming is recognized.
Thank you, Mr. Chairman. I also want to thank Senator Toomey for his wonderful leadership on this committee, just in the event this is our last hearing. Thank you for your service.
Hearing tomorrow.
We're conflating topics today. Digital assets are not on trial. Fraud and organizations are on trial. So let's separate digital assets from corrupt organizations. FTX, as I've been saying for the last few weeks, is good old-fashioned fraud. And what they did is separate from digital assets. Now, we've all heard that FTX lent its executives hundreds of millions of dollars in commingled customer funds for personal use, and customers who tried to wire money to FTX were instead given Alameda's routing number. That is fraud. That's fraud whether it's conducted in US dollars or euros or digital assets. That is fraud. Additionally, even though FTX was a multi-billion-dollar enterprise, it had a shocking lack of corporate controls and enabled affiliates to conceal the movement of money and take on enormous liabilities, enabling the misuse, well, they misused customer assets that were supposed to be appropriately safeguarded. FTX, in its terms of service, said, title to customer digital assets always remain with the customer. Now that we know is a lie, and now millions of FTX customers around the world will suffer. So FTX is a failure of people, safeguards, and regulation. It's not a failure of technology. The people of the digital asset industry need to get really serious about risk management and compliance with things like anti-money laundering laws, and that's why we've seen a failure of a number of firms engaged in riskier practices, even for the digital markets this year. So one question people should ask themselves is how FTX grew so quickly. They were founded in 2019 and grew to be one of the largest digital asset exchanges in just 2 years. So you look at other companies like Kraken, Coinbase, and Bitstamp, they've been around for a decade. They've grown organically. This committee needs to be focused on putting legislative solutions in place that would have prevented FTX's collapse and other firms like it. This means things like regulation of digital asset trading, providing consumers with adequate bankruptcy protection, disclosures, and stablecoin regulation. So let's not conflate topics here. Mismanagement, failure of people, inadequate controls is what's on trial. We need to regulate this business and lay digital assets on top of our existing financial regulatory framework. Questions? Ms. Schultz, why do digital assets and distributed ledger technology have the power to make our capital markets safer and more efficient?
Well, there's multiple ways that they can do that, and one of them is by removing the intermediaries that we've been talking about, where there are potential for such things as an FTX to take customer assets and misuse them. When those intermediaries don't exist in digital asset systems, then you don't have the same risks. You can also have faster, cheaper payment systems than we currently have, and a more global payment systems which allow people to send money cross-border in a way that should be very important for a country like the United States, which sends a lot of remittances across the world.
I know I'm out of time, but I want to make a plug for the Responsible Financial Innovation Act that Senator Gillibrand and I have co-sponsored, that we've been talking to our colleagues about. This is a case study in why we need the Responsible Financial Innovation Act. We will be reintroducing the bill next year. We're absolutely delighted and willing to take your comments, suggestions, ideas, and it's time to move. Time to move to regulate the digital asset industry. Thank you.
Thanks, Senator Lemmons. Warren is recognized.
Thank you, Mr. Chairman. So Sam Bankman-Fried and other crypto billionaires argue crypto is special. But a basic principle of our financial system is same kind of transactions, same kind of risk, means same rules apply. Right now, if a bank takes money from terrorists and the bank and the banker then have broken the law. And that's why banks spend so much time and so much energy identifying who their customers are and reporting suspicious activity to authorities. A lot of crypto firms are not doing these kinds of checks. So crypto has become the preferred tool for terrorists, for ransomware gangs, for drug dealers, and for rogue states that want to launder money. In 2021, at least $14 billion in digital assets went to criminals. Now, that's a lot of drugs and a lot of ransoms and a lot of bombs and a lot of nuclear materials, but it is likely only the tip of the iceberg. A new report finds that one crypto exchange alone helped launder over $10 billion for criminals and countries like Iran. Even so, the crypto industry continues to take the position nothing should change. Professor Allen, the crypto industry claims that it doesn't need to do all of the know your customer and other anti-money laundering checks that banks do and stockbrokers do and even Western Union does, because crypto is uniquely transparent. Everything is on the blockchain, so criminals and rogue states that try to launder money in crypto will quickly be found out. Does the fact that the blockchain is public mean that it is more difficult for criminals to launder money using crypto?
In many ways, the blockchain is the worst of all worlds. For everyday people, the blockchain is a permanent public record of all their transactions, which is a privacy nightmare. But for sophisticated players with a vested interest in hiding their transactions, there are all kinds of tools available, mixers, tumblers, etc., that can hide the provenance of their crypto assets. And far from being difficult for criminals to use crypto to launder money, the fact that there aren't KYC checks is the point.
Okay, so crypto is actually easier to do money laundering. Let's look at another crypto industry argument. Professor Allen, the crypto industry claims that it would be too much trouble and maybe even technologically impossible for them to check customers the way that banks and stockbrokers and even Western Union does. But let me ask, do banks and stockbrokers in Western Union have to invest money and resources to make sure that they're set up to conduct those checks?
Yeah, I mean, KYC requirements are simply part of operating a financial services business. But avoiding those requirements, as you say, is critical to many crypto business models. Blockchain-based transaction processing, as we've discussed, is very clunky and expensive. Ms. Schulp has just told us that it can be more efficient. The only way it's more efficient is if it actually avoids the KYC checks that can slow things down. So this crypto business model is in many ways a regulatory arbitrage play.
Right. So actually, it's an interesting question. If banks and Western Union said they shouldn't have to follow anti-money laundering rules so that they could make more money, they could improve their profitability, what would our country say, and what does every country around the world in the financial system say?
No.
Right. Okay. So, Mr. O'Leary, I know that you are a big supporter of crypto, even after you lost $10 million in FTX's collapse. But you are an experienced investor. So let me ask you, do you believe that the potential benefits of crypto are so promising that we should accept weaker anti-money laundering rules and weaker compliance from crypto firms than we require from banks, from brokers, and from Western Union?
No, I think we should apply the same regulatory structure that we apply to existing trading of stocks and bonds on exchanges tied to broker-dealers. That is not complicated. It's already been implemented in other countries. And so, and I take issue, Senator, with your concept that it makes it easier to do money laundering. Currencies have been used for drug trafficking since the 60s in the American dollar, when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do. And that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union? And I think your answer to that was yes. Is that right?
No.
Mr. O'Leary, you have 30 seconds. Keep your answer short.
It's not yes. I'm just saying, if you know your client rules on both sides of the transaction and use a crypto such as USDC that is regulated, you solve this problem, Senator, overnight.
Well, I appreciate that you want the same kind of rules to apply to everyone, and we can talk about what's needed to make that happen. You know, the dark underbelly of crypto is its critical link to financing terrorism and human trafficking and drug dealing and helping rogue nations like North Korea and Iran. Crypto doesn't get a pass to help the world's worst criminals, no matter how many television ads they run or how many political contributions they make. It is time for Congress to make the crypto industry follow the same money laundering rules as everyone else. That is why Senator Marshall and I introduced a bipartisan bill today that requires crypto to follow the same money laundering rules that every bank, every broker, and Western Union all have to follow today. Thank you, Mr. Chairman.
Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman, and let me add my words of appreciation to Senator Toomey for his leadership on all sorts of issues. I've disagreed with Senator Toomey many, many times, but I've also had the opportunity to work with him closely on lots of issues. So, Pat, thank you. And thank all of you for being here. You know, over the last more than 2 years, I think this committee has been trying to take a crash course on crypto and understand all its implications. And I think the fact that we have 4 very bright individuals here with diametrically opposed views is an illustration of the challenges we're facing as a committee. But I do want to pick up where my colleague, Senator Tester, did. Because the question is, where do we go from here? And on the one hand, the impulse is, of course, to want to protect consumers. On the other hand, we want to make sure that in the process of trying to do that, we don't give a government imprimatur to a system that is so inherently risky and without necessarily any, as at least 2 of our witnesses said, underlying value. So, Professor Allen, if you were king, queen for the day, what would you do right now? And let me just say, we've got the SEC. The SEC clearly has the authority and power to go after fraud, and we need to make sure they have the resources to go after fraud in this area because it's grown very fast. But beyond using the existing tools, what would you do going forward?
If I were queen for a day, I would ban it. But if I were someone who was dealing with multiple constituencies and realized that that might not be viable, I think the path I would take would be to strengthen banking law, what I've been calling Glass-Steagall 2.0, and make it quite clear that banks simply may not touch crypto in any way, shape, or form. And then I would give the SEC more money. I would pass legislation that makes it clear, abundantly clear, that all crypto is a security. And to be clear, the definition section in the securities legislation doesn't just list investment contract. This isn't just about the Howey test. There's all kinds of securities that don't go through the Howey test. Bonds are just listed. If it's a bond, it's a security. So we could say, if this is a crypto asset, it's just a security. You don't have to go through the Howey test framework. And then we apply all the securities laws robustly, and I think that is the best way forward.
Thank you. And is it Mr. Schenken, Mackenzie Schenken?
Yes, sir. You can also call me Ryan Atwood from the
All
OSC.
right. All right. Well, in that case, listen. Let me appreciate your testimony. The bottom line, as I understood, is you said we should just deal with this and regulate it like it's gambling. And I've been listening. I've been listening to analogies to Enron. I've been even analogies to the mortgage meltdown, mortgage-backed security meltdown. At least in those cases, they are backed by real assets, right? In the case of Enron, you've got an energy-producing company. In the case of mortgage-backed securities, it was an outrageous scandal. At the end, there was some. It was supposed to be backed by real houses. What is this backed by, if I could ask you? What is this backed by at the end of the day?
Nothing. It's a story. Robert Shiller, the Nobel Prize-winning economist, talks about how economic narratives form. They're in response to real events. In this case, with cryptocurrency, I would argue the genesis was the subprime crisis. The Bitcoin white paper, released in October of 2008, was perhaps well-intentioned. It was intended to be a peer-to-peer currency that would avoid all intermediaries. So the story has understandable appeal. I think if crypto serves any function, it's to highlight the myriad failures of our regulated system and our banking system and our American economic system to provide people at the American dream, or what's left of it. That does not make the story true, however, the story of cryptocurrency. What it does is lend it enormous power. And these stories spread, as Shiller describes, like viruses, infecting one person to another, much like a multi-level marketing scheme. But for the digital era, instead of a 5-hour Tupperware party, you get a 60-second TikTok video. And you're encouraged to invest because you see other people investing. They call it FOMO, fear of missing out. We used to call it greed. People get very excited. These bubbles build up very big, but then they collapse very swiftly. And I think that's what we're seeing now today.
Thank you. Thank you all.
Thanks, Senator Van Hollen. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. I, too, want my kudos to our ranking chairman. Thank you so much. It's been a pleasure to work with you. I, too, we've not agreed on everything, but you are a gentleman, and I do always appreciate the opportunity to have an open line of communication with you, so thank you. To everyone here, thank you. This obviously is something we have been working on for a period of time here, and really appreciate the insight you all bring. I do want to follow up on my colleague, Senator Van Hollen's line of questioning with Professor Allen. I want to ask the rest of you. Clearly, she's supporting banning it. If we don't ban it, how do we regulate it? She put forth a proposal, which is isolate it from the banking system and then define it as a security. Does anybody disagree with that or have any other ideas about how it would be regulated? Mr. O'Leary.
The concept of passing legislation that would ban banks from integrating cryptocurrencies and crypto technology, if that were to happen as an investor, I would short every American bank stock because it would make it the most uncompetitive financial services sector in the world. The innovation that is coming forward, once regulated, is going to be profound in terms of how it changes the cost, the efficiency, the auditability, the productivity of the banking sector. Just look at things as simple as ACH transfers, how archaic they are. Look at the Fed wire.
So let me just stop you there. I only have so much time. So you do not agree with isolating it from the banking system?
That's insanity.
Okay. Ms. Schultz?
No, I also don't agree with isolating it from the banking system. I do think that if I were queen for a day to regulate, I would ask Congress to make some clear lines here with respect to what is and is not a security. And I think a lot of crypto tokens do fall under the category of security, but it's not always clear. I also would ask Congress to draw clear lines as to which market regulator handles secondary trading, giving the commodities segments to the CFTC and the securities segments to the SEC. That should put good guardrails in place in order to apply similar risk frameworks to similar risks.
Thank you. Mr. Shankman.
If we allow cryptocurrency to infect our banking system, we will be back here.
Thank
we will
you.
be back here, not in a good way.
And Professor Allen, anything else to add? So I'm going to ask you, because I also appreciate your conversation with Senator Tester, and it's really focuses on why we should isolate it from the banking system. But let me ask you this. Many crypto advocates have taken this scandal that we are talking about today as an opportunity to suggest that the failure of FTX was due to its centralization and argue for decentralization finance, or DeFi. Can you talk a little bit, would that have made a difference? And what impact would DeFi lead to possible greater centralization of wealth? I mean, can you talk a little bit about what that means, if anything?
Sure. So DeFi stands for decentralized finance, but that's a marketing term because it's not actually decentralized. As I mentioned earlier, technological decentralization